Welcome to Alloy Silverstein's short video series where we cover popular topics. My name is Chris Siglius, one of Alloy's CPAs that try to make the crazy world of accounting and tax a little less overwhelming. For today's video, we're going to cover the American Rescue Plan Act's expansion of the 2021 Child Tax Credit and what it can mean for you. More specifically, we're going to quickly discuss the advanced child tax credit payments. For 2021, the child tax credit has been increased to $3,600 for children ages 5 and under, and increased to $3,000 for children ages 6 through 17. The IRS is going to look at the age of the child as of December 31st, 2021 to determine which amount they qualify for. Most taxpayers that qualify for the credit may have received a letter in the mail from the IRS that states that they are eligible to receive a monthly advance of the child tax credit. In most cases, no action is going to be needed to receive the advance payment. The payments are set to begin by July 15th, and taxpayers should receive a letter from the IRS that's going to show their expected payment amount. If you were late to file your 2020 return, the IRS is going to use the 2019 return to determine the credit amount. The IRS is expected to recalculate your payment once the 2020 return is fully processed, and then they will adjust the rest of the year payments accordingly. The tax credit is going to work similar to the prior years, except it's going to have two separate phase outs instead of one. In both cases, the credit will decrease by $50 for every $1,000 over the limit. The first phase out by the IRS only applies to the increase in the tax credit for 2021 until the credit is reduced back to the original amount of $2,000. The income amount you have to earn in order to reach the first phase out is going to be $150,000 if married filing joint or a qualifying widow, $112,500 if filing as head of household, or $75,000 if you're a single filer or are married and filing a separate return. The second phase out is the same as prior years for the original amount, which starts to phase out at $400,000 married filing joint or $200,000 for all other statuses. Once your 2021 credit amount is determined, you should receive 50% of that credit broken up into monthly advanced child tax payments, unless, of course, you opt out of those payments. If your family or life situation is expected to change in 2021 and is going to result in receiving excess advanced child tax payments, you should consider an opt-out of the advanced payments. This could be something like a change in filing status or an increase in income. Anyone that receives too much of the credit will have to repay it back to the IRS when they file their 2021 tax return. A portal to unenroll in the payments is expected to be live soon if it hasn't already been made live by the time you're watching this video. The IRS has mentioned that the portal should allow you to update your information throughout the year as your situation changes. Whether you're divorced or separated, the IRS determines the amount of the credit based on the tax returns being filed. How your filing status is being reported on the latest return is going to determine how the IRS calculates the credit for the advance payments. If you are divorced and each year you guys switch who gets to claim the child, it's going to be important for the parents to update the portal so that one of the parents does not receive erroneous advance payments and then has a balance due at the end of the year. The IRS is expected to release various tools on the portal which are going to allow taxpayers to make sure that the IRS has the most up-to-date information. And as I mentioned previously, our understanding is that as the IRS receives this information, they're going to try to adjust the remaining payments accordingly. So you want to make sure that you're getting the right amount by putting that information in the portal. Now, if you expect your income in 2021 to be higher than 2020, it may be the best thing to do is to consider opting out of the advance payments, as any excess payments are going to have to be paid back. If you're unsure if you're going to qualify, you could try to continuously update the portal with your information, but that's going to require you to be super proactive and try to make sure that at all times you kind of have the ability to predict your entire income for 2021, which is going to be hard to do unless you're later on in the year. So if you want to decrease the chance of possibly having a balance due strictly because you're receiving advanced child tax payments and you don't really want to have that headache or have to have that worry, then potentially opting out is the best thing for you to do. Now, remember, just because you opt out, that's not you opting out of the credit. All you're doing is opting out of the advanced payments of the credit. At the end of the year, you're still going to get the full credit. And if you get the advance payments at the end of the year, you're not going to get paid the advance credit or be able to take it because you're already getting that money in advance. If you receive the money, you could do whatever you want with it. The important thing to remember, though, is if you're kind of on the fence and your circumstances could change, you may owe it back to the IRS, and they're going to be looking for their money, and they're going to want you to pay them as quickly as possible. Now, thanks for taking the time to watch this video, and be sure to follow us for any updates. And should you have any questions or suggestions for another video, you can email that email address right there, solutions@alloyserviceline.com. Thank you. Have a good day.